Hey, welcome. So today we're doing the market conditions for August 2020, and we're going to look at the business confidence and also overall economy. So we will start doing the sharing the screen first, and I'm going to go over a couple of legal stuff with you before we go further. So just bear with me, and we will start now. Okay. Now, make sure you read the legal disclaimer. Again, this is a general nature only. It's not intended for investment or advice, okay? So make sure you seek some independent professional advice before you do anything. Again, what we do is really general in nature. We are an education company, so we just educate, okay? So just be aware of that. Now, first of all, I want to talk about the Australian business confidence. So if we look at October 2019 all the way to July 2020. Now, before the pandemic, things wasn't that good anyway. So it was negative, -2, 0, -3, -5. And then June was a bit better, but this is just before the coronavirus. So this is the coronavirus. And then the business confidence dropped really low, -65. Now this is in March. This is where in Australia, all the business shut down. And April, still the same, but the online business start taking off, more people moving online. So the confidence improved a little bit more in May, was -20. Now, because it's a partial open up, so restriction from stage 3 start with reopening, and June much better. But as you know, in Melbourne, we're back to stage 4. So in July, things got really negative. So we go straight back to stage 3 first. So we had -14. Now the number for August will be pretty negative. We would expect from the forecast modeling roughly about 30, 35, -35. So, and this mainly impacts us in Melbourne. Couple states is going back into lockdown again. So because of the corona numbers is going up, the case study, the case. Now, the question you guys need to ask yourself is that what would be like in September when the job keeper and job seeker number reduce? So would that affect everything and the business confidence? So that will be a couple of things to be aware of. So, but my forecasts are based on the modeling that I'm doing. August will be about -35. September, if we gone back to, because stage 4 doesn't stop in Melbourne until the second week of September. So I expect the number will be around -20, give and take around there. Really until October, we will see some number, positive number. So just be aware of those things and play it accordingly. Now, this is the number based on the business conditions. So this is all about sales and manufacturing. In June was -8, sales was -6, profit was -8, and employment was -11. But in July, the number got a bit better. Business condition was 0 because of partial opening up. Sales was going back up. Profit started turning positive, which is fantastic. Unemployment number is down to 0.2. Now, this is not the actual percentage, it's just the confidence, okay? So just be aware of it. Now, this is the economics indicator. It just came out on the 10th of August by the Reserve Bank of Australia. So as you can see, cash rate is 0.25. Ain't gonna drop any lower because there's nothing to drop. If we get to 0, there's no more room for stimulation for the government, apart from printing more money, which is going to increase the inflation in the near future, or hyperinflation. If you don't know what the hell they are, check out these inflation, deflation, and a few other scary things on my YouTube channel. Explain all that, so have a look at that one. So economic growth is 0.4, it's not very strong. It's actually quite depressing. Inflation had never seen -0.3% before, so that was interesting. Unemployment from official RBA is 7.5, 7.4, 7.5, that's the number because they rounded down. And the employment growth was -4.1. Now, the actual number, if we actually included underemployment, is actually 15%. So that's a big one. Now, wage growth is 2.1. Don't know about that one. Now, average weekly earning is about 1,257. Depends on which business you're in and what type of jobs you're doing. But everybody's doing it tough. So this is really average. So household saving ratio is 0.5, 5.5. So it's getting better. Since the I think since 2019, the house saving ratio actually gone up. Now, net foreign liability is 40.5% GDP, but that's a big one. It depends on how long we're in recession and how much money we're going to be printing. So this number will change. At the moment, one Australian dollar is buying 72 cents US. So not too bad. It's actually getting better. Australian dollar is not too bad compared to other country. Our economy is doing quite well. So better than other, except Melbourne. But beyond that, until we find a cure. And by the way, talking about a cure, the research in Australia and also in UK is doing quite well. We're doing stage 2 starting September. So once that go through, possibly out of the 3 to 5 vaccine in Australia, one of them will be ready. So probably by November. So that would improve the economy and people feel more happy and people start spending. Don't forget summer is coming. So once the summer comes, things is going to improve a bit more. But then we have to deal with bushfire and all the other crazy things that we always have to deal with. So that will be interesting. Now, China's GDP growth is negative 6.8%. And so if they are not doing well, it's not going to do well for us either, because we are biggest exporter to China. And I think we need to reconsider our strategy offshore manufacturing. I mean, I'm a big fan for it. As you know, I do a lot of strategy planning and to cut expenditure, you move offshores. But with all these issues that we face with coronavirus, I think we need to have some manufacturing, especially the key type of work, and the government need to subsidize some of those key manufacturing back to in Australia and really do things differently. So that way we will be able to stay ahead of the next issues. I mean, whatever it is coming at us. So we always have some issues in Australia, but this pandemic actually taught us a lot about how we manage our economy. So just be mindful of that. This is a part of the learning. Now, bonus gifts for our viewer. I don't know if you guys know, we have our first birthday not long ago, but because the coronavirus, we are actually running this ongoing. Now, sign up for the getting started in the stock market for the Millennial course is only $129. And if you are trading or investing or have download an app, like Robinhood apps and all that stuff, guys, girls, make sure you just do this course. I'm not even joking about it. In this course, I teach you a lot about how to manage and invest, and it's really simple, but we've got to start doing something, right? Now, for $129, I'm going to give you a whole bunch of bonuses. I'm going to offer you a 40 minutes quarterly webinar that is valued at $499. I will give you a stock market infographics valued at $97. And bi-monthly macro market video. We talk about the macro market, where to invest and so forth. And that is $599. Now the whole package is $1,195. You only have to pay $129 for it. So you got all this really great value for free. So check it out, go to the website, have a look at it, and check out our academy. And don't forget to like, share, and subscribe. Okay.